let's say, for example, somebody wanted to take a loan out on their Hex or something, right? Because they want to start something, like a business in real life, right? Or they wanted to just fund a lifestyle or something like this without selling their bags against themselves. Mm-hmm. Okay. Well, in this situation, you would deposit your Hex onto Fiat, then you would borrow a stable coin. You'd be paying an interest rate on that, of course. You send that to Coinbase, do what you got to do, pay it back at your own pace, and then you'd be able to get your Hex back without having to sell it, right? So, that kind of opens up a lot of doors for just anybody in the community to do things like this, or speculation, arbitrage, all sorts of things. So,
gotcha. So, I'm guessing you've heard of something like called liquid loans, very similar to that.
Yeah, of course. Yep.
Yeah, that allows you to borrow against your own assets. So, what you're saying is that you guys allow us to put Hex as a collateral and then get back Fiat as a payment.
So you can use a range of different assets that you can deposit and borrow between all of them, right? Mm-hmm. So for instance, let's say you had a lot of PulseX, okay, and you wanted to buy or you wanted to borrow some Hex for some reason. You could deposit PulseX and you can go borrow some Hex. Mm-hmm. Okay. You could also, let's say you have a lot of exposure to Hex. That's worth a lot, right? But you want to provide liquidity for the Pulse and PulseX pair. Mm-hmm. Okay. Well, what that would look like is you would deposit your Hex, and then you could borrow Pulse and PulseX against your Hex, right? So you'd be taking out two loans in this particular situation. Mm-hmm. And then, you post the liquidity. Maybe you have a higher APY on your liquidity play, right? So you're getting fees generated from that liquidity play, and then you're able to pay back your loan at your hopefully at a faster pace than you're being charged, right? And then that's some sort of maybe passive way that you could perhaps turn a profit, right? There's a range of different things that you can do with this stuff. Mm-hmm. A lot of people think that this would be a competitor to liquid loans, but in the general crypto space, nobody really looks at something like MakerDAO as a competitor to Aave, right? Yeah, it just doesn't happen. Yeah. They serve a specific purpose. They do a specific thing. They mint a stable coin, whereas Aave is like a bank. Okay, they serve two different markets. They do two different things, right? The only thing that they do have in common is they allow you to borrow against a coin, right? On a basic bare bones level, you're able to borrow against your Pulse on liquid loans, and you're able to do the same thing on Fiat, right? But with Fiat, you can use a range of different assets. Mm-hmm. So a great example of this would be to go to the testnet, testnet.fiat.io, and just play around with it and get familiar with it. It's not too hard to grasp, but you simply deposit something and then you can borrow something else.
Okay, gotcha. By the way, are there any stable coins that me as a borrower can receive when let's say I stake Hex? Are there any stable coins that I can receive?
So when you're staking,
not staking, but you know what I'm saying, like
depositing
Hex as collateral.
Yeah, so if you're depositing Hex as collateral, and you're literally just a depositor and you're not staking Fiat or anything like that, mm-hmm. You're just going to get more Hex, because people, the borrower is going to have to pay back Hex, and they're charged Hex on interest. They're having to pay that Hex interest, right? Mm-hmm. So now, if you wanted to get stablecoin exposure or Pulse, let's hypothetically speak, because we have testnet running. Let's say you have, like on testnet, you have Pulse, PulseX, Hex, 𝘰𝘰𝘯𝘕, 𝘊𝘰𝘯𝘦 and then USDC, I believe. That's what we have on testnet, right? Mm-hmm. So when you stake Fiat, as people borrow and loan, lend out these assets, you get a passive basket per se of all of these coins, right? So, if I were to pull up my my stake on testnet, you would see that I can claim Pulse, PulseX, Hex. I could claim all these coins right now, and then they'd be deposited to my collateral on Fiat automatically. So,
okay,
yeah,
gotcha. So I guess I have two questions then. I'm going to use Hex as collateral, and I could get back USD. You said if I use Hex as collateral, I can only get back Hex as payment. You know what I mean?
Yeah. So imagine, you're a depositor, okay, and somebody is borrowing your asset, right? They're borrowing your Hex. They have to pay back Hex always, and they're being charged an interest rate in Hex. So, if let's say a lot of people start borrowing a lot of Hex, that interest rate will start to climb up because it's based on market conditions and how many people are borrowing, and versus the liquidity in the pool. So if the pool is completely borrowed out, you're going to be being paid handsomely for being a depositor. If nobody is borrowing, it's going to be extremely attractive for people to actually go and borrow Hex. Okay. Now, when they are borrowing these assets, they have to pay it back. They have to pay back the asset, including the interest for which they borrowed. So you can't take a Hex loan and pay back USDC. You can't do that. You'd have to go on the market, buy the Hex, and pay it back
in the Hex itself. Okay.
Yep, exactly.
Okay, so then what's the benefit of doing a deposit versus doing a stake? Like if I deposit PulseX, I get back 1%, 2%. But if I stake PulseX, don't I get back 4% a year or something like that? What's the benefit of doing deposit versus staking?
So when you're staking, you can only stake the fiat token, right? So if you want a share of the revenue, you'd have to stake the actual fiat token itself.
Gotcha.
A depositor, typically in the DeFi realm, what we've seen with Aave is most of the time you have really big players use this stuff. Okay. If people like 3AC, even Celsius use this, Aave, a notorious trader, he uses Aave, and they deposit billions of dollars of assets, and then they go and borrow against it at a very, typically small amount at a time, but they're, millions of dollars, right? And then they go and speculate with that stuff and go play around. So, if you're one of those people and you just want some passive APY, you'd be a depositor. Now, if you're, wanting a basket of assets and perhaps betting on the cash flow of the fiat platform itself, then at that point you would want to own the fiat token and then stake it naturally, right? So there's different ways you can play this game, right? You're not going to get probably a better APY being a depositor as you will being a staker. But you gotta have depositors so you can play the game. And naturally speaking, these whales, they want to keep their assets, and then they'll just naturally be depositors. So
I gotcha. Yeah, because it's less risky, but because it's less risky, you get less reward. But if you stake it with fiat, there's more reward, there's more APY that you get.
Yeah, and I mean, you're subject to price movement up and down. You're subject to the if there's any sort of exploit, right? Or if the Aave code had some underlying issue that nobody has found yet, and then we fork it, and then all of a sudden it's found. That would kind of suck, right?
Yeah.
There is risks with all of this stuff. Okay. And another risk would be if Pulsechain was a flop or something like this. But thankfully, Phiat will be launching on Ethereum, targeting Q1. So that'll be exciting. Yeah. So and you can participate in the famous SAC and get a allocation of eFiat for when it does actually launch on Ethereum. So that's pretty cool.
Yeah, so I was about to ask too. That's my very next question. What exactly is Famous or Famous.io?
Yeah, so Famous.io is a leveraged trading DEX, for Pulsechain, and same idea, catered to the Hex community, right, to the RH ecosystem. It is a derivative platform. So you have your spot trading with fiat that you can do, and then you have your derivative trading with Famous that you can do, and you can take out much more leverage on Famous, right? And it's a lot more user friendly for anybody that does want to sort of hedge their positions or leverage trade, or get exposure to price movement of an asset, right? But yeah, it's a fork of GMX, which is up and running for about a year and a couple of months now, and year to date, It's been, its price performance has done spectacularly well. It's I think it's up 70% year to date in the bear market.
A fork of what?
It's a fork of GMX.
GMX. Okay, gotcha.
Yep. And GMX price performance has been doing very well. They have a revenue sharing design. It's a little bit different than what ours is, but basic concept. You get a portion of the fees as a GMX staker, et cetera, right? But it's been around for about a year. They've done about $120 million worth of fees generated in the last year on layer 2s, right? So it's not even on a mainnet. And, we'll have pretty much all of the same coins that they have. And then we'll also have the cater to the RH ecosystem. So, that's very exciting. We think that Famous will do hopefully quite well on Pulsechain. So that'll be exciting.
Okay, nice. By the way, what's the maximum leverage that you can do on?
I'm sorry?
I said, what's the maximum leverage that you can do on Famous?
So on testnet right now, it's set at 30x leverage.
Okay, wow, that's crazy.
Yeah. So and on GMX, I think the leverage is set to 100x. So
okay.
But I mean, what's great is with Famous, you have 3 ways to play the game as well. Again, you have the good old staking the Fame token and getting 40% of the fees generated, right? You have, and you're basically betting on the cash flow of the asset, the future cash flow of the asset, because that's why you're buying the token, because you want the a passive what is it called, staking rewards, right? Because you get them in all the tokens, same as fiat, right? So if people are trading a bunch of one asset or the other, you're going to get a lot more the fees generated in that particular asset. This goes both ways with fiat.
So you just get a basket of fees. You get a rewarding for 5 different tokens.
Basically, yep.
That's cool.
So, and you can, it's not like a hex stake where you have a time restraint, right? You can just leave that shit there and let it ride, and then just claim it every day if you wanted to, or you could claim it every hour, every month, every minute. I mean, you probably shouldn't claim it every minute because you might pay more in gas than you will in profiting from the claims. But you're more than willing or more than welcome to do so, I guess. But yeah, anyways, so that's one way to play the Famous game, right? A second way is to be a liquidity provider on Famous. So much like how the Pulsechain liquidity works, where you post your liquidity and you get a liquidity token in return, it works similarly to that with Famous, but you have a range of assets in the pool, right? So you have target weights in the liquidity pool, and it basically acts like an index. Okay, so for instance, if you go look on testnet, testnet.famous.io with a PH, you'll see on the dashboard the liquidity or the amount of assets that are deposited for users to be able to trade and stuff. Right, those are the liquidity pools. Okay, now you'll have target weights that are set, which is basically like a well-diversified portfolio in the space, I guess that you could say. And so when you buy this liquidity token, you buy it directly with the contract, similarly to posting liquidity on PulseX, except they don't call it buy, but in this, for all intents and purposes, it's called buy on testnet. So anyways, you buy this PHLP, right? As the liquidity pool grows, the supply grows. Okay. Unlike the Fame and Fiat token, which has a fixed supply, the PHLP token, which is the liquidity position on Famous, it is elastic, right? So it grows as more people deposit, and it shrinks as more people withdraw. Okay. And so as traders are trading, you're basically betting by providing liquidity. You're betting that the traders are going to lose, which typically, most of the time they do. They typically lose, whether or not they're terrible traders or whether or not these traders are taking out, mini insurance policies, I guess you could say, right, on hedging their positions and kind of protecting from upside movement or downside movement with leverage or something like this, right? But essentially, as people trade and as people get liquidated, you'll incur, I think, 60% of the fees by being a liquidity provider, right? And you could deposit one asset and you could withdraw with that PHLP token. You could withdraw a different asset over a period of time. So, you know, it's not like, it's kind of very interesting on the things you can do with this stuff. But, you know, that's another way to play the game, being a liquidity provider. And then the third would just be, you know, you're a trader, you're trying to hedge your position. Let's say, you know, you have a bunch of 555 stakes, right? And you're unable to sell when you see people dancing on coffins and, you know, calling people out for being furus and saying, you know, we win, right? And we're at the top and you're staked out, you can't sell. So something that you could use to protect your bag against the downside would be famous, right? You could leverage up with a smaller portion and protect against the downside with your stakes, which you cannot end, right? That's a very real possibility and a very real use case that you can use this stuff for. And then the same thing on the inverse. Say you're sitting on a lot of cash and you're seeing a lot of whales dumping the price endlessly. I mean, past couple of days, it's been pretty brutal, right? So, you know, you have a bunch of cash, you're kind of scared to buy yet, but you have this sneaking suspicion that we're close to the bottom. So it would be valuable for you to, you know, have the, you know, take out a long with a small portion of your stack with, you know, a levered position, right? As an insurance policy for if the price does rise, you know, your entry would then be kind of protected from that price movement upwards. You know what I mean?
Yeah. So
there's different ways you can use this stuff. It doesn't all have to be, you know, degenerate gambling with high leverage, you know, like a drug addict, right? Typically sophisticated investors use this stuff. So, but yeah.